For a long time here, gold was stuck between 1800 and 1900, maybe 2000 on the high end, a couple of days. There was no real performance. It was dead money for the last 3 years. Well, when you get a breakout to an all-time high, that wakes people up. And, now we've really rather quickly shot up 15, 20%. And that's going to get people's attention. And so you're going to say, oh, a new bull market. Great. Let me in on that. I want to buy some gold. So I'm quite bullish, and my forecast is much higher. I mean, I think we're going to 5,000 easily, and then maybe 10 or 15. But that's years out. So let's stick within the next couple of years.
Gold prices have surged to unprecedented heights in 2024, consistently setting new all-time highs weekly. Early investors in gold this year have reaped substantial profits within a concise timeframe. Projections indicate that gold prices could surpass the $2,500 mark this quarter and reach $3,000 by year's end. Notably, the acquisition of gold by central banks has played a significant role in driving its value upward throughout the year. LawrenceLepard, managing partner of Equity Management Associates, offers even loftier forecasts for gold, envisioning potential targets of $5,000, $10,000, or even $15,000. However, he acknowledges that such levels may take years to achieve. Anticipation mounts as expansion in the investor base is expected to propel gold to even greater heights. A report from asset management firm Sprott suggests that as the audience for gold broadens, its value will likely continue rising, aligning with recent predictions of a potential ascent to $3,000 in 2024. The recent breakout to all-time highs has captured the attention of investors and shifted perceptions about the precious metal. Lepard anticipates that more investors will recognize gold's performance and seek to capitalize on the emerging trend. A glance at gold's chart over the past quarter century reveals a confirmed, long-term uptrend. Key indicators of this uptrend include higher highs and higher lows over time, a trend that gold has exhibited since the early 2000s. Furthermore, gold has adhered to a clear uptrend line for most of its two-decade-long bull market. Lepard compares the current gold market to historical bull markets, suggesting significant price increases ahead. He believes the current uptrend is just the beginning of a potentially lucrative period for gold investors. Come along as we explore LawrenceLepard's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
And my forecast is much higher. I mean, I think we're going to 5,000 easily, and then maybe 10 or 15. But that's years out. So let's stick within the next couple of years. I mean, I think it's interesting, and on my Twitter feed, you'll see, if you go back a few days, you'll see a Ronnie Stofferle chart, and it's actually in my quarterly report as well. The mean Bloomberg estimate for the gold price in 2027, I believe, was somewhere in the $1,700 or $1,800 range. So until these new numbers you just pointed out from Goldman and others, the average Wall Streeter is thinking we're going to go back to 2% inflation. You don't need gold, and gold's going to come back down from this $2,300 to $2,400 level. I think that's starting to change. Obviously, Goldman is a smart shop, and they're saying they think it's going higher. And my sense is they're right. And what that will lead to is a difference on the part of a larger part of the investment community, to understand that gold is in a bull market. And typically in bull markets, when they get started, gold goes up, in the 70s, it went up 22x. In the 2000 to 2011, it went up, 7 or 8x. And in this particular one, it started at 1,050 in 2015, and it's at 2,400. So we're up, 2.2x or something like that. So, I think it's destined for significantly higher numbers from where it is now. And this is just the beginning. And as more and more people come to realize that, and more people come to realize that it's performing well, I mean, you know how Wall Street operates, you know how investment firms operate, they chase performance. And so, for a long time here, gold was stuck between 1,800 and 1,900, maybe 2,000 on the high end, a couple of days. There was no real performance. It was dead money for the last 3 years. Well, when you get a breakout to an all-time high, that wakes people up. And, now we've really rather quickly shot up 15, 20%. And that's going to get people's attention. And so you're going to say, oh, a new bull market. Great. Let me in on that. I want to buy some gold. So I'm quite bullish. What's happened here, David, is everyone's looked at the gold price and said, when it was bouncing around between, 18 and 2000, And the ASIC, which is the all-in sustaining cost of mining an ounce of gold, that's gone up rather significantly since COVID came along. You know, the cost of the fuel and the explosives and the labor, those costs keep marching relentlessly higher, so that we're now at ASICs that are closer to 1,350 as kind of an industry average. So, you know, if the price of gold is only going to be 18 or 1900, that margin is really starting to get squeezed. Now, you know, as we now know, the price of gold is at 24. Well, that nicely restores that margin and the profitability of these gold miners. And I think the gold mining stocks have not woken up to the fact that, you know, gold is much more likely to be at 2,700 than it is to be at 1,800. And I think once the gold mining stocks wake up to that fact, you know, there's going to be a re-rating, and you know, my fund and other people who've invested in gold stocks are going to do extraordinarily well.
The exacerbation of geopolitical tensions, such as conflicts in the Middle East and Ukraine, coupled with the prospect of lower U.S. interest rates, have further bolstered gold's status as a safe haven investment. However, what truly fuels the rally is the unwavering demand from China. Retail shoppers, fund investors, futures traders, and even the central bank in China are turning to gold as a reliable store of value amidst uncertain times. According to Lepard, China has significantly ramped up its gold purchases at the governmental and individual levels. Economic uncertainties, including real estate and the stock market challenges, have prompted Chinese investors to diversify their portfolios by investing in alternative assets such as gold. China and India are actively promoting their currencies internationally. China is securing deals with oil-producing nations like Saudi Arabia to trade oil in renminbi, while India is exploring oil pricing in rupees with countries like the UAE. This diversification away from the dollar-dominated oil trade could boost gold's appeal as a hedge against currency fluctuations and geopolitical instability. Lepard highlights that this trend among BRICS countries, including China and India, is reshaping the global currency landscape, potentially driving increased demand for gold as an alternative reserve currency. Let's get back to the interview.
I think we should talk, if we're going to talk about the gold price, I think it's really important to talk about the demand that's coming out of China. Because, and I talked about this in my quarterly letter, we show a chart in there. I mean, one of the things I find very interesting is that the largest gold ETF, GLD, is actually shrinking in size, which suggests that North American investors are selling, on balance, selling gold. I mean, this ETF is getting smaller. And yet, gold is going on to record highs. And why is that? Well, also in my quarterly, you could see a chart that shows that China has really stepped up their purchases of gold at both the government level and at the individual level. And I think China's been encountering some economic turbulence in terms of their economy, in terms of their real estate, in terms of their stock market. And so I think what you're seeing is a very strong bid. I think, well, one, I think that China at the governmental level is trending toward gold because they realize that the dollar as a neutral reserve currency is not as good as it used to be since the U.S. decided to seize the Russian assets. And I think that China at the individual level, people are realizing that real estate's not the investment they thought because it's not working, and perhaps stocks are risky, and so you see a lot of gold purchasing. So to me, and I'm not sure really, I don't think that kind of purchasing is driven by, you know, drones in the Middle East. I think that's just pure, you know, what's going on in their economy. And remember, China's an enormous economy. I mean, you're talking, you know, 1 billion people, right? A lot bigger than the U.S. So to me, that's kind of the gold story. And the other place where you can see it, it's very interesting. It depends on which exchange you use over there and what you look at. But if you follow all the gold Twitter people and the ones who are looking at China carefully, lots of various ways of purchasing gold there are trading at premiums over melt value, which suggests to me that there's really strong demand to get a hold of gold. So that too supports the kind of, this demand is coming from China side of things. And finally, I'll just add the Luke Groman thesis that, you know, you're starting to see all these BRICS countries, and we've added a lot of countries to the BRICS. You're starting to see all these BRICS countries denominating their oil purchases in their own currencies, as opposed to the U.S. dollar, the petrodollar. And so that, you know, leads to, you know, yuan paying for oil, and you know, the yuan being a currency that's getting accepted by the oil producers. And I know the Chinese were large buyers of real estate and speculators in real estate. And my understanding, and I'm not close to it, I'm not on the ground, but my understanding is that the Chinese real estate market has been very soft and is problematic. And so I'm thinking people are thinking, well, we're not going to chase that because it's not working. Meanwhile, gold is working. I mean, gold is up significantly. And so they're more likely to chase it.
U.S. sanctions, especially targeting Russia's central bank, have raised concerns about the safety of holding dollars. This uncertainty is prompting countries to turn to gold, despite its smaller market size than government debt. Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.